Hi, it's Lee and welcome to the Tesla Economist. Now, I'm sure everyone can remember that on the Q4 earnings call, Elon said that if things go well this year and there are no force majeures, then 2 million production is a possibility. And he even says there would even be enough demand if they hit that level of production. This made a lot of investors immediately assume 2 million was now likely on the cards for the year, and so much so that the stock is pretty much priced in to hit that number. The Uber bulls even think this number is low, and that Elon is even sandbagging about 2 million potentially. If you don't believe me, there'll likely be some comments below of people saying that 2.2 or 2.3 million is possible this year. Now, we have actually seen glimpses of various factories at run rates that lead us to believe that the current potential run rate of the factories is actually already around 1.96 million vehicles a year, as long as the factories are continually running. In fact, that was more at the end of Q4. It's possible the new factories have ramped up a little since then also. Well, at least possible that Texas may have, if 4680 production has now begun there. Either way, I'm also on the side who believe 2 million is certainly possible, as it wouldn't take a lot of effort to increase production that much more for the entire year to hit that target. So I thought we could take a look at what earnings for the year could be if Tesla saw 2 million deliveries. I'm also curious to see how much Tesla could beat earnings from last year, which was around $12.5 billion, and what effect this could have on the stock price. I know a lot of people are expecting Tesla to once again become a $1 trillion company, but is it possible that if we're in a bull market, that Tesla's stock price may set record all-time highs again, if earnings continue to rise? 2 million vehicles produced would be an increase of 50% growth year over year, which is a figure we have been told many times as a target. Just as a side note, for those of you who think Tesla may exceed 2 million, I would say that growth would most likely have to come from Texas, with the 4680 Model Y. Yes, there should hopefully be some Cybertrucks produced this year too, but I think likely just in the thousands, nothing like enough to have a serious impact, until perhaps next year, when in volume production. If Tesla can produce an additional 200,000 Model Ys from Texas, then that would require around 14 gigawatt hours a year of additional 4680 cells. They have 4 lines in Texas, each of 25 gigawatt hour a year capacity. So depending on the progress of those cells, it is entirely possible. So I've gone ahead and added in production for the year, roughly how I see it playing out each quarter from each factory for each model. Deliveries may be a little bit different, as there were a lot of vehicles still in inventory and delivery for the start of the year. However, a similar number of vehicles that are produced this year may also end up in inventory for next year. So it should all even out for the year anyway. And I have my final number for deliveries for the year at just around 2 million, in fact 4,000 short, which if they can produce a few thousand Cybertrucks will take us to 2 million. However, I'm going to leave out the Cybertrucks for now. Cybertruck production would actually reduce earnings a bit, as there will likely be significant expenses running and testing that line until we get closer to volume production, especially with experimental manufacturing techniques. Anyway, when we estimate ASP, it comes in at $49,000, which is actually pretty good. This obviously assumes no more price reductions throughout the year, which is hard to judge, but the US dollar weakening is also helping for international sales. On top of that, we have now adjusted the price of the Model Y since it has been increased already this year. When I include FSD, it gives us a gross margin of 21.2% without regulatory credits, and this comes to $100 billion in auto revenue and almost $21 billion in gross profit. Regulatory credits are still going strong, and seeing the rate at which legacy autos are deploying their electric vehicles, I don't see these credits going anywhere anytime soon. In fact, Tesla received $1.78 billion in regulatory credits last year, the highest of any year. I'm going to add in $1.5 billion for 2023, which brings us to 21.9% margin, which is actually not that large an increase in margin due to the fact that 2 million vehicle sales produces a lot of profit. So as a result, the credits have relatively less impact. Now, I actually think 22% margin may even be on the low side, given that last quarter alone was 26%. But obviously that didn't factor in all the price drops. Either way, I think that 22% is a believable enough number. Then we have the new bonus of government subsidies. We know Tesla are sharing their subsidies with Panasonic of 35 gigawatt hours for the year from Giga Nevada at half of $45 per kilowatt hour, leaves Tesla $787 million in subsidies. And let's say that Tesla also managed to produce 15 gigawatt hours of 4680 cells for the year. Now, this is hard to judge, but we know that Kato Road facility was already at 4 gigawatt hours in December, which is at 40% capacity, and we have 100 gigawatt hours more in Texas, which is starting to come online. So it is admittedly a bit of a guess, but that would be an additional $675 million. This gives Tesla over $1.5 billion in government subsidies. As for energy, we hear that the Megapack factory is at 12 megapacks a day, which is 17 gigawatt hours a year run rate already, from a 40 gigawatt hour a year capacity. They're aiming for 100 to 150% increase in production, so possibly at a 35 gigawatt hour a year run rate by the end of this year, and at full capacity sometime early next year. So I'd like to estimate a total of 25 gigawatt hours deployed for the year, or around $13 billion in revenue from Megapacks, compared to just $3.6 billion in total for energy last year, although that does include some Powerwalls too. Services and other has been growing by $100 or $200 million a quarter over quarter, so I think $8 billion is entirely possible there. As for costs, I think energy could see a 30% margin, including subsidies. I know a lot of people are speculating higher, but 30% is still a great margin, and it'd be interesting to see just what margins energy give us this quarter. I'm guessing it would be between 20 and 25% already. Remember, we're using a 30% average for the year, but by the end of the year, when the factory is ramped closer to capacity, it may very well be about 40%. Energy margins are obviously going to be an important side of the business to keep an eye on this year. And we'll have 12% margin on services, which is good to see becoming more profitable too. This brings us to a total gross profit of $28.6 billion, an increase of $8 billion from last year. OPEX could be up a bit higher for the year, so we'll make some adjustments for that. But then when we remove the OPEX, we see the difference of what the increased gross profit makes. We have $21 billion in operating profit compared to just $13.6 billion last year, a 53% increase. Due to higher interest rates and more cash in the bank, we actually get some reasonable income on interest for the year too, of approximately $400 million. We end up with $19 billion in earnings compared to $12.5 billion last year, 51% increase in earnings year over year, despite dropping prices around 20% across the board. The majority of this is due to the subsidies and the increase in profit from energy, totaling around $5.5 billion. But due to the delivery numbers being much higher, there was actually an additional $2 billion in gross profit there too. Bear in mind, the new factories were hurting gross profit somewhat last year. Now, I know we didn't see 50% growth in deliveries last year, and we had the price drops, and the economy was not looking great, but sentiment has changed in the markets. Despite the current economic climate, there is a chance we could still be back in a bull market. If Tesla are able to deliver this many cars, and remember, we know they have the production capabilities already in order to do so, we know they've adjusted their prices so much that we expect there to be the demand for this many vehicles too. This could look very positive for the company this year in a bull market. Getting anywhere near 2 million deliveries alone would be an outstanding achievement, and make Wall Street take note. Then seeing profits also increase 50% year over year, whilst other legacy auto companies are likely struggling to sell cars with interest rates being as high as they are, resulting in Tesla's market share increasing further too. Well, it's got to be a good look for Tesla's stock price. Just remember at one stage, Tesla used to trade above $400 in 2021. That year, Tesla only had $5.5 billion in earnings. We're talking about close to 4 times as much in earnings for the year, when the stock price is currently trading about half that level. And if this has the tailwind of a bull market too, which could run to new all-time highs, basically anything is possible for the stock price this year. Either way, if we've learned anything, just about any extreme could happen with the stock price. But there seems to be plenty of fuel for the fire this year. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.